Hi everyone, how are we doing? Hope you've had a nice weekend. Been a bit of a busy one for me. Very tired. Let me know if video quality is better today. I feel like Facebook was rubbish. And if I take a little while to respond to any questions, there is a little bit of a delay on it. I changed the settings to try and make the video better. Just means that there's a small delay between the video coming to you, basically. I think it's about a 30-second delay. Okay. I'm gonna crack straight on anyway. Presume everyone's in. First things I should go over actually are the trades we've currently got open. So we've got Bitcoin, dollar yen, and euro yen. I think that's it. If I've missed one, let me know, but I think that's what we're in. Okay. So dollar yen, where we're coming into some trendline resistance. So on the daily chart, we've got a bullish trend that's been in place since March. We are short because I believe this is very extended. Also, potentially part of a big triangle on the weekly. That's not to say that we can go straight, just break down lower. I think we could end up going higher in the end. But we need 5 legs, which we've got labelled as A, B, C, D, E. So we need our E leg down. Okay. As seen on the weekly, this could extend. So we could come down and then go higher. That would be the 4th leg, and we still need a 5th. But this could be the 5th here. So we are short. Let's just go back to that daily. So this trend line's actually being retested now. We had a first leg down and an 88.6 fib retracement. So that's a pretty deep retracement, to be honest. However, we didn't overlap the 114.60, so I'm fairly confident in the trade. We had what looks like could have been an ending diagonal here. It was pretty messy. We had RSI was puking, so we were getting higher highs and the RSI was getting lower highs. So around the 114 area, which is where we rolled over from. I think we're in from about 113.50. So at the minute, there's not really any changes to this. We are testing this support, so we probably will get a bit of a bounce. As I've said in previous webinars, I like to fade Monday moves. When the market moves on a Monday, it's what they call mutual fund Monday. Okay, it just means that everyone comes back from the weekend and they continue the positions they had on Friday. It usually leads to the opposite happening on Tuesday, which is called turnaround Tuesday. Okay, so you have mutual fund Monday, everyone pumps money back into the market from Friday, and turnaround Tuesday, basically everything just gets reversed the rest of the week. That's what tends to happen. The majority of the time. Majority of Mondays are fake moves. So what would be good is, obviously, if we get a bounce on Monday, I don't want too much, maybe into the low 113s, and then this move to continue lower. What I have seen, just to go on to something different, besides Elliott waves, I just want to show you guys something called harmonic patterns. Okay, so I'm just going to bring this Google page up now. Now these harmonic patterns are also called W patterns or M patterns. So what I'm seeing currently in the dollar yen is an M pattern. Okay, so it is one of these 4 here. Okay, so I'm just going to go back to it so you can see it. So from this high, sorry, I'll basically just draw it in. You know, it's kind of making like the letter M, right? And I'm obviously expecting it to come lower, so that would complete the M pattern. So just to go back to it, how harmonic patterns work, they're essentially just based on Fibonacci levels. Okay, so if we just take this bullish Gartley, okay, this is a type of harmonic pattern. If we take this as an example, you have a strong leg to the upside. Okay, then you have a correction, which is usually a 618. We then bounce into an 886 of this second move. Okay, so we have first move up, and then the second move is correction. The third move is a correction within that correction. Okay, so it'll be an 886 correction. That's a Fibonacci number, 886. And then you'll get the extension, which is that D leg. Okay, so I'll just put it into context in the dollar yen. So what we're looking for is, I mean, it could be any of these four. But if I just look at this first one, we've got a 618 retracement. So if I take this leg from pretty much the last time we touched, the first time we touched this trend line, we take that first leg, which is leg A, and then measure the retracement back to B. You can put it on this spike down here, or you can put it on the trend line again. The trend line, it says here, it says 614. Okay, that's basically 61.8%. It's close enough. Even on the spike low, it's 67%. It's still in the ballpark. Okay, so we had that correction. So let's go back and see what comes next. So we have the C leg is an 886 of this second move. So let's go take a look. Put it at the high. It's at 879. Okay, which is, you know, it's pretty much 886 again. It's within a decimal place of it. So then what happens on the fourth leg? We will get 127% extension. Okay, so this number here, this where it says 1.422, so I'll just move that just in the right place. 1.27. What else does it say? It says 1.27 and also a 786 of the first leg. Okay, so it's 127% of the third leg and 786 of the first leg. Sorry if I'm just throwing numbers at you right now. Just trying to kind of quickly show you it, I guess. It's not something I always use, but I've noticed it, I've seen it, because it's rare you get an 886. Okay, the only time an 886 matters is when it's a harmonic pattern. It's very popular in these harmonic patterns. Usually I don't like an 886, I want it to bounce at the 618, I don't want it to pull back too far. 886 is a very, very deep correction. Okay, but considering we are on the short side, and we've had an 886, obviously I'm looking here for reasons why we want to remain short, and if we do, what targets we want to look for. Okay, so we had the 886, and we could get 127% extension, which also would line up with a 786 of this very first leg, which is this bottom number here. A 786 is just below. Okay, so it's this area here. Where is that price wise? It's around 111, 110.90. Okay, and we're currently at 112.80. So we've got almost 200 pips to the downside if this is the bullish Gartley pattern. Okay, it could also be a bullish crab, because again this is another one that can be a 618. Sorry, that's wrong. A crab is between a 382 and a 618. It can be, but I'm guessing the most common for that would be 50%. As you can tell, I don't use these very often. It's not really my ballpark, but they are successful, and they do occur quite frequently in the market, so it might be something worth thinking about. Also, what I want to know is this first, this very big move we've had since March. We get a 38% fib coming in around the same level at 110.75. Okay, so there's a confluence of Fibonacci numbers around here. There's the 127% extension of this, there's the 786 of this, which is part of the harmonic pattern, and there's a 38 of this entire move since March. Okay, so naturally I think that's going to be a point where we could find a bounce. So realistically, that's the first target. I think we might have in the trade room a target in the 111s. I'm gonna change it. I don't intend on taking any profits really, because I feel like we'll break below this previous support and head into the 110s. So that would be the first target. I don't tend to set a take profit on my orders. I just leave my targets open because there's always the possibility that we can go way lower on this trade. If I was, sorry Ben, one sec. Okay, sorry about that. Next thing I want to look at is the other trade we're in, which is the euro yen. If I've confused you, by the way, with the harmonics, don't worry about it. They confuse me as well, but they work. I have to say they do work. Some traders post them on this website I'm using here for my charts is TradingView, tradingview.com. There's actually a community on tradingview.com. There's some good traders that post their stuff, and some harmonic patterns do frequently come up. I haven't seen one for the dollar yen, but they do pop up and they do seem to work quite well. Okay, euro yen is the other trade we're in. So I think we played this breakout. Is that right? Or was it the 618? It could have been the 618. Looks like we're chopping around a lot. It looks like we're going to get a triangle, in my opinion. It could be a really tight triangle like this. But I prefer them when they're a bit more open. I think we're gonna continue to do this for quite some time. So if this was A, we could still be in B here. C, D, E. So I think we might do that for a little while, but let's just wait and see. The problem with it is that the euro is quite strong. This one wasn't actually posted in the trade room. I think I just took this in the chat room. Just generally wanted to be long the yen. Obviously we put the dollar yen in the trade room because we expected the euro to be strong. So we could get some choppiness. So I might close this one out. We'll just see how it develops. I may pull stops. Where have we got stops? 129. 129.20 is the high. I think that's quite a valid point to have the stops, to be honest. I don't intend on moving them any lower. It would be too tight to the price, to be honest. If we break above there, then it's not a triangle, and we could head way up here into the 131s. Okay, let's have a look at Bitcoin. That's the other one we're in. So Bitcoin just loves to dump and then fall asleep. It's one of the most frustrating things in the world. Basically moved sideways since we opened the trade on this spike. Eventually dumped, and now probably going to correct for a little while, make everyone want to fall asleep, and then die again. I suspect we've got first targets at 5,000. If this is if this wedge is valid, we could head into the high 4s. We've got I'll just explain. I think I've explained this before, but in a ending diagonal or a descending wedge, so let's just make this bigger. In Elliott waves, we look for ending diagonals, but it's essentially a descending wedge pattern. So it's the same thing, just a different name. Each leg has 3 waves. Okay, so we look at this. It says 1, 2, 3, 4, 5. Within each of these numbers, there's 3 subwaves. Okay, so if that was 4, 5 needs to have 3 subwaves. So if I come down a frame here, so there's our first leg down. All this sideways action was the second wave, and then we're expecting a third wave lower. So it's an ABC basically, the same way we measure corrections, except from this one is it's in the direction of the trend. Okay, so it'll be an ABC. So let me write that in. So an A, if that was a triangle, B, and then C wave would be down here. And the same way we do corrections, we measure the corrections. If you take the length of wave A, project it from the end of wave B, and that gives you the length of wave C. A equals C, as we call it. So if wave C is the same length as A, that comes in at 4,000. So we could correct a little. I think we will correct a little bit. We might even come to retest this up at 6,000. I doubt it, but we're gonna move sideways for a little while. I think then we'll come down here, possibly break through the wedge ever so slightly, maybe just spike down, and then we could head a lot higher. If this genuinely is an ending diagonal, that means that the entire correction is complete, or at least for now anyway. If that is the end of a 5-wave move, we'll then get a 3-wave correction. How high it goes, I'm not sure, but usually if you trade an ending diagonal, once it breaks out to the upside, it returns to where it started, which is 11,500. So it would have to break this upper trend line first. Yeah, so if it comes down to 4,000, you're then going to want to see it break back above about 6, really, to get bullish on it. And then we could see about 11.5, in my opinion. Okay, what else did I want to look at? Let's go through some of the majors quickly. Euro dollar. Okay, so we expected a turn in euro dollar. I think we had a trade briefly, but it was chopping around a little bit, so we didn't hang on to it. We had a strong day on Friday. This is one to keep an eye on if we can get longs. Let's just put like a little count on this. So I would imagine that was the first wave, second wave correction. 3 could come and test this. 4, 5. But you know, you don't need to get any FOMO, fear of missing out. You don't, because what goes up must come down. You know, so we would get a correction, I would expect. So wait for 5 clear waves up, which we could be in the third one now. Could take us into the 115s after a 5-wave move, and then our 3-wave correction comes in, and that's where you can look to take long positions. Just depends how good it looks when it gets back there. So I've got my eye on that one, but I'm not really opening any trades in euro. Just because if you go down on the, let's say, the hourly time frame, it was a little bit choppy. The structure isn't ideal down there for me, so I like to take my entries in the lower time frames. It's just not that clean. Okay, what's next? Cable. So if you have a look on the daily chart here on the left, looks like we're getting a big triangle pattern. So this is just gonna again chop around, probably before going lower, I'd imagine. But you know, we could be surprised. So again, you just wait for the breakout on this. If you were gonna trade a breakout, or you know, to the upside or downside, let's say we just go straight up from here, you're gonna want it to come and retest this. Yeah, so if we break out, you want a retest of the triangle, and then you can get long. You could probably have your stops. Just get a horizontal line. I can't find a horizontal line, but you'd want them, you know, just inside the triangle. You know, somewhere around there. Same for the downside. You know, if we went straight down, you're going to want to see a retest of that and place your stops just inside the triangle. So either way, if you wanted to trade this, if you wanted to trade the pound, that triangle pattern, you got to wait. You got to be so patient with it, especially on the daily chart as well. This could go on for a long time, could go on for months really, which isn't really surprising to think that cable could just, you know, chop around while you've got Brexit and everything going on. Cable's pound dollar. Cable's just a nickname for pound dollar. I've got a question. Notice when you're looking at the charts, Bitcoin for example, the time you're using for the pattern goes back a few months. Just wondered why. How do you mean, Phil? I'll just continue while I wait for Phil to get back to me. Aussie dollar broke out of this channel. We did have a long. Did we have a long? Maybe, maybe not. I can't remember. But it pretty much retested it. I think, yeah, that was the retest. But we came back for that level as well, so that was a bit of a gift. But on the other hand, this could be a 5-wave move. So it means that we'll get a 3-wave correction to the downside. Alternative count would be this, that we already had it, but there wasn't really 3 waves down, it was just kind of one leg down. So I'm not that convinced on that one. Just have to wait and see. Aussie looks strong, but you know we wanted a long at 71.10, so it would have been wrong to compromise it and try and take it at 71.60. The risk reward just wouldn't have been there. So same again. That's just another wait and see. Unfortunately, the market's turning on kind of at least a medium time frame, medium term. So it can be a little bit messy. So which obviously means that you're left with much fewer opportunities, because these structures aren't really refined yet. Okay, Kiwi looks like it's it looks really good. We've had a breakout and it didn't even come back to retest it. It broke out of this channel. I thought we were going to get a 5th wave down, which would have been better, because this descending wedge or ending diagonal would have contracted a little bit more. And of course, you want to trade the breakout. So the more it contracts, the tighter your stop loss can be. Unfortunately, it broke out, never came back for us. Right now, it's probably something like that. Let me just get rid of this. So we probably had wave 1, which went into channel resistance. So I'll put that on the lower time frame as well here, so you can see it better. 2, 3, 4, possibly 5. And if you take a look at the RSI, which is obviously momentum, you can see that this has divergence. So we're hitting new highs. RSI is not following it. Okay, so we got lower highs on the RSI. So that could turn, could be an opportunity to get long. To get long once it comes back down. Canadian still actually within this wedge. It could be a wedge. Let's delete these because that was clearly wrong. Because the way oil's been acting, I'm not really sure how I feel about dollar CAD, to be honest. We have had a strong move down, but oil really fell really hard, and I just if it falls again, dollar CAD should go higher. I just don't love it. Strong move down would suggest you want to get short on a bounce, but again, it's another one that I'm just a side on. If anyone's got any questions on what you want to look at, feel free to ask. The Swissy looks like we've had 5 waves up. I would expect the 3-wave correction. So if this is a completed wave, the correction I would like is towards a 50% at least. So this could see as low as 98.30, could even come down to a 618, which I imagine would be about 97.60ish. Let's just check. 97.68, yeah, not far off. But yeah, we are breaking down. I think we did have a short. I think a little bit of patience would have helped us on that one, because we look to have had look to be in our 3rd wave down. So I'd expect a little bit more weakness in this. We could maybe come back and retest that for wave 4. So I'll keep my eye out for dollar Swiss. As most of you know, if you're a premium member with us, we were short. I think we took about 5 pips profit once it started bouncing here with these Greek candles. But once we have 5 down's the confirmation really. So we were we were a little bit early, but we had a couple of very strong candles breaking down, to the downside. I imagine we'll find support actually. Let me draw that in. Probably here. However, if this is let's have a look. It's actually not. I was going to say if it's a wedge pattern, but it could be. It could be a wedge pattern. It would return, as I said before, it would return to where it started, which would be right the way down there. So there could be good risk reward on a bounce. Obviously place stops, back inside this wedge. Could target down here, so I'll have my eye on that for this week. Euro pound. Quite tricky, to be honest. Let's have a look at the weekly. I would be tempted to say that we could be in some kind of triangle, just because I was looking to be bearish. As you can see, we've got this arrow here. We wanted an ABC correction. We could still be in B, could be in a triangle for B. So this could really drag out a little bit on the weekly. This is so, next year we could just chop in a very small contracting range. You never know. So if we get a triangle for wave B, the breakdown's not going to come for a long time. And if you just look at the price action on the daily, if it was bearish and B was finished at the high there at just below 91, you would expect, I would at least expect, a clear structure. I would want 5 waves, and you can see 5 waves, but 4 overlaps 1. And one of the rules of Elliott wave analysis is that wave 4 should never be in the territory of wave 1, so that's invalid. If it was some other count, and this was a sub wave 1 and that was a 2, it's just too deep. It's too deep a correction now. This bounce has been too strong, so I feel like we'll probably just get 3 waves up, and then 3 waves down, 3 waves up, 3 waves down, until the triangle's complete. Phil says, do I see gold improving any day? So look. Some interesting counts. Don't know when I did these. Looks good though. So gold could see some more weakness. It's possible that wave D of this triangle completed, so it looks like on the weekly, just a big fat triangle. So we've had bearish move down, yeah, sideways consolidation for years and years and years, and then you'd expect continuation to the downside. So look inside the triangle, look for A, B, C, D, E, which is 5 waves. So it looks like I'm expecting another retest of this. I don't know if we'll get that. This could go straight up here before lower towards 1290-ish. So in the short term, Phil, it's potential, but this looks like 3 waves to me. This red ABC, it looks pretty clear. It could always be wrong. It could be, if I just go down to a 4-hour. Could be this. I'll put that in red as well, just so it's. So instead of ABC, it could be 1, 2, 3, and then the 3 finished here. Then we had a 4 and a 5. Complete the pattern. that then means that this move down was an ABC correction, three-wave correction. So it's possible we could come lower, maybe this week, and then bounce. It's possible. So it means that this isn't a wave forward. It means that count was complete. We'll see 112, 112.90 maybe. Fix that fib level. It's 12.86.87. You could probably have a pretty tight stop loss on it. Could have it here at 11.96. Wait for a pullback. Let's go down to the hourly. Maybe back to this support. 12.08. So you could risk, what's that, $12 if we get 12.08. Could go up to, what was it, 12.80 something. It's a pretty good risk reward, isn't it? So it's possible, yeah, but only in the short term. Back on the long term picture, it's as I said before, it's just a triangle pattern. God, that's so messy now. So yeah, we're still in the triangle. So you know, I don't like trading anything inside a triangle. I'd rather wait for the breakout. So for me, it's, I suppose on the short term you can, Phil, if you're after something. Gold owes you. Okay, if anyone's got any other requests they want to look at, just let me know. Oil started to bounce. It's still within, was it within that channel? Let's go down 4 hour. Kind of overshot it a little bit to the downside, didn't it? We know oil likes to spike. This rally's not very inspiring, is it? Considering the strength of the move down, this is very, very corrective to me. It's just not strong enough. Not yet, anyway. It's not strong enough yet. You know, if we were to rip now, you know, in a week and get five waves up, you know, you could look to buy a pullback in crude. Oh yeah, Phil's still in the trade from last week. Okay, yes, I think we got stopped at 55, which of course would be the low. Yeah, that's just the way it goes sometimes. With oil anyway, it just loves to pit people out of a trade. So a good area, Phil, is that, you know, the area of the last correction we had. So I think that was when we got long, around 60. We started to see this little bounce happen. Obviously now we know that that little bounce was just a correction, so that's you know, an area of interest at least. So I would say around here. We've also got a trend line, long-term trend line that we broke down. That's at 58.70ish now. Actually, it's near 59 by the time it gets up there. It could be at 59. So yeah, 59.60ish if you're still in the trade. We've also got this channel coming in as well. So there's all sorts going on. There's a lot of resistance above us basically. You know, there's no buy setup down here. Not for me. I'm a trend trader, so you know, I'd rather be looking for short positions. If you're still in the long, yeah, you might get 59, you might get 60. Just, you know, you got to see how it plays out. If it screams above 60, you know, then you're laughing. You can just move your stop loss higher now. You know, once you get up there, that's what I would do. Just in case, you know, that long-term count that I just had. So let's go back and I'll show you it now. Just get rid of some of this crap. Daily. So there's obviously the chance that this black or blue trend line is correct, and we've maybe just overshot it a little bit, and that this was an ABC down, and that's complete. So if the pattern, you know, if the correction is complete, then yeah, we could go right up into the 80s. So you just need to give it a little bit more time, probably. I would put your stops at least now at the low at 55ish or 54.50, I think it is, and just wait and see. And gasoline, okay, probably a similar situation. They're probably correlated, aren't they? Okay, so as you've just seen, we've just gone from the oil chart, which I've got an ABC with, you know, wave B going back up to the highs. This is a flat correction. Wave C is really sharp. RB1, I've looked at it and labelled it differently. Okay, it's not actually labelled it as correction. So it could be potential that we get a bounce into wave 4. Again, last correction we had a little bit of a chop round here, which is 180. So again, I just stick your stops at the low, 153, and see if it can catch some wind. Really, not inspiring. Same as oil, pretty sideways. There's not really anything else I want to look at. Oh, let's have a look at bonds. Actually, I want to look at bonds. So, what's the story with bonds? I was waiting on a breakout of this wedge. Still could potentially be. It won't be a triangle, that's for sure. But could still be within some kind of channel. We won't know until we break way up here. But we were at this and a diagonal. We were already in the yen trades at this point, I think. Or we might have opened on this retest. But we're in the ballpark there, weren't we? I expected us to rally, and we have done. I think this will continue. Probably get little pullbacks here and there, but ideally this will just go a lot higher. In the long term, it looks like a flat correction to me. So, flat correction, as we know, is ABC back to the lows. Actually made a new low, but they can do that. They don't just stop at the lows. Sometimes they can go down, and it looks like 3 waves to me, which is this one labelled in blue, ABC. Then we get wave C, which I've got labelled here in black, and wave C always has 5 waves inside it. Okay, 5 subwaves. So if that's going to work out, then you know we need to push quite a lot higher, and we can. Third wave is, you know, it's the strongest. It's the most impulsive wave. Some people like to call it the money wave. So being short yen with bonds flying into potentially a third wave, we're riding the money wave right now in yen. So that's why I'm keeping those positions open. Debatable on the euro, again, just because it's so strong. You know, not all correlations have to hold up. You know, the yen could get stronger with this happening, but doesn't matter if the euro is stronger or just as strong and it just moves sideways. So yeah, that's it. If anyone's got any other questions, I don't see any. That's pretty much it for this week, as there's nothing else on my radar. I'll wait maybe 30 seconds just to see if anyone's posted anything, because I know there's a little delay on this. Let me know, was the video better as well? I have got it loaded up on another Chrome, a Google Chrome screen. It looks pretty good. Just want to make sure that it's alright for you as well. Also, I'm not sure if there's some other people in here that are on either members, premium, or could be free members. Do I take trades in bonds? I don't, but only because my broker doesn't let me, I don't think. So I'd rather just trade the correlation. But yeah, it could have been a good setup down there. Would have been a nice risk reward if we took a long. What would we currently be on if we were? It's like a 5 to 1. But that's a bit deep of a correction for me, so I probably wouldn't have traded it. I like to trade things individually, just how they look. I do use the correlations, obviously, and looking at bonds I was bullish, but this came back pretty deep after after the first leg we got up. It was a 786. I prefer them, and it looked pretty strong as well. If I'm going to trade something, I would prefer it to be a very clean 5-wave structure and then a slower ABC correction. Yeah, and then of course you take the long position there. With, as you can see on the right hand side here, you had first leg up, second, and then it looks like an extended third, doesn't it? It's not a clean 5. We really would have needed another correction here, a breakout, and then an ABC down, and then maybe I would have thought about it, posting it as an alert at least, just in case there's people here that can trade it, just because I can't, shouldn't post it on there. But it's just the structure wasn't really there. It was a little better in the yen, really. And this is going back to the start of the month, so I don't know if we've had a couple of trades over the last 2 weeks, but I think we've been dipping in and out, haven't we? So yeah, that's it. I'm going to end the video there. Enjoy the rest of your weekend. I'll speak to you guys in the chat room tomorrow. Alright, cheers, speak to you later.